The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. I almost forgot to put my earphone in. I was listening to the show like I was from early this morning. Yep, we're all in. That's it. Hey, nice shows from early today, 8 o'clock. John Logan kicked us off. Man, I tell you, TFNN is the network of information. Amazing, terrific. And I tell you what's really impressive is that we're beginning to hear all over the show how the hosts are listening to the hosts. I think that's really admirable because there's just so much here to learn from. Okay, I don't want to waste any time. The Dow's up 14 at 16,528. The S&P is up about 1 at 1944. The comp index is up 9 at 4698. Let's see, gold is down 5 at 1102. Copper's down at 33. Bonds are down just 4 seconds. I still believe we've got the Japanization of our bond yields, that we aren't going to be doing all that much in the way of ups and downs. I wouldn't be surprised if in February we start to get hints that by March the Fed is going to lower the rates. Anyway, and the dollar is at this particular point up a little bit. I don't want to go there. I want to go straight to the charts. I spent a lot of time with my subscribers going through these charts, showing this. Look what I sent out the other day. I missed it. It was just an error on my part and just in timing. I got to admit it. I love to think of myself as a timer. I missed it. Did discuss it, didn't act on it. And what it was that this channel said that the moment you break and close below it, you've got to look at that August the 20th break in the Dow of last year, where it went down, bam, straight down to the 15,370 level without even looking back. We are in that phase right now. We broke down. What I had said to subscribers this morning, I just didn't know where the price was. So I said at 12:30 I'll be updating. Very unusual for me to update with the intention of having positions. Usually I update just to say, hey, this is what's going on, and we did get that, we didn't get that, we might want to take a position. This is specifically, I wanted it, and I think we've missed the chance now. What I'd said is, I believe we are emulating the exact same pattern as in August, and that regardless of that huge, look at this is unbelievable. Look at the S. I'm looking at the E-mini. I'm just about to put in a trade last night. I think, okay, should I, shouldn't I? And what happens is there's a 1938 on the E-mini 10-minute chart at 10 minutes to 7. I'm looking at a round number. I've got myself a left side, right side. Was that? Well, no, sorry. That was, wait. Let me go through this again. That was on the 8th. Today is the 8th. And it was at 6:50 this morning. No. I'm here. That's where I was. It was last night at about 9:30, 10 o'clock. That's right. I'm looking at this and I'm thinking, should I, shouldn't I? And I know China's going to open. I know they're going to do everything they can to buoy the price. And while I'm thinking, it just takes off. Bam, you get this bar. And then whoosh, you get a retest and you spike up. And it sails from it goes from 1952 straight up to 1960.50. And that was, and I said, okay, I'm kind of done. I watched it come all the way back. I said, no. This is just a little too volatile. Even if you put in stops, it moves so quickly that you're liable to only make a point or two if you put in the stop, because it'll go up and then come down quickly. So I just said, just hold on. We'll leave it. But what I did do is I drew in the rectangle. And I kind of watched it bouncing a little bit and I left it. Turns out you go peak A, peak B, peak C, peak D to 1960. That was the high. And this morning, when I looked at it at about 5:30 or so, yep, that was that peak D. I put my down arrow. I'd already drawn in a potential for the arch formations. And then I drew in I always do this, from the high that was made at just after 8 o'clock when it went to that 1960 level, and from the low that was made on the retracement at 1941.72, I just drew in a rectangle. So when I came back to it, to the office to look at it later on, and then I saw that I drew in the left side, right side price time match. What happened is at 7, just before 7, the market went down to 1938, started a nice bounce, and it looked like a bounce, very steady, kind of bar by bar by bar. And then out of the blue, you get the jobs report with 190-something thousand. Markets seem to like it. Spirals up, breaks that resistance of the rectangle formation, and zips all the way to 1964.75, right there at 20 minutes to 9. I'm looking at this and I say, that's a B, but the character of this looks like that pattern that I call the single leg A failure mode. In a sense, that looked like a single leg A failure mode, a news-driven event that has no correlation to anything other than buying pressure. And when that buying pressure fades, that's when you see what the real market is like. Now, I've drawn this. I drew, there's a whole new technique that I've been working on, which I'm not even prepared to discuss because it's still in the process. I'm calling it Chapman Wave 5 for now, that's all, just CW5. So we got the 5, and there was that spiral up, and that's where I put in an X. That was the start, I believe. And what I want you to do for subscribers was to say, we should short this rally because I don't think we're going to do anything with it. I didn't do it because it was all happening as I was sending out my newsletter. So I just said at 12:30 we will talk again. And what I said is we wanted to short the Dow because, now I'm going back to my story, because this bar matches so well that bar over there. Or it doesn't have to be, but it's one of these black bars, and it looks like it's the second one after the break, the second one after the break. And now the third one is unfolding. And my contention was that if the market closed very poorly today, and of course you were up 130, 140 in the futures, it looked like, oh man, you've missed your opportunity and you won't get it again, because either it's going to hold up there, and that's going to make it a really tough decision. Do you want to short a market that's up 150 when the pattern has changed? Or do you want to do it now because now it's already given back all the gains? But my contention is that now we can move to the next step, and this is really what the issue is. Let's go, and there it is. We're going to leg D to the downside, and I had drawn in my 5 right there, put it over there. And as I say, this is nothing yet that I can discuss because it has nothing to do with the Chapman wave count. That's why I had to think about what to call it. And now look at this. This is what I wanted to show you. VIX.X. The VIX index has a potential to make on a Monday, if everything works out, a climactic thrust to a double leg D. I'll talk about that when we get back. Basil Chapman, Tiger Conditions Hour. Dow's down 4.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new Yield Pledge money market account with funds from another financial institution, or deposit new funds into an existing Yield Pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their Yield Pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. In the den, there were some discussions about support in my Chapman Wave resistance support projections. That's the series there. 1934.83 to 934.50. And take that out. I don't see anything below it for a little while. So 1928.25 on the 120-minute chart. That was the 10-minute chart. So, okay, let's get back to the story here. So I'm looking at, got it, okay, the VIX. So the VIX volatility index, if it does it today, that'll continue the leg C, but as soon as it overtakes 25.27 on the upside, that starts leg D. But if today we don't break 25.86 on the VIX, the volatility index, trading at 23.65 right now, but instead we get this incredible thrust overnight Monday to the downside, because we closed closer towards the lows today. We have to be negative, really, I think. It doesn't matter how much, anything negative would be a big disappointment for the market. And then Monday, we start that potential for a spike to the upside in the daily chart, which represents the two streams flowing. This is your Route 90. This is your Mass Turnpike, and you've got the access road. And as they join, you've got to speed up like crazy because you've got to join the traffic on the major highway. That's the overlapping peak that you would see going to a C. I call it an overlapping wave, and that would give you a D, a very powerful D usually. And then it turns out to be a leg, and then of course. Today, if we close anywhere around here, anywhere in the 23s, you've got the weekly chart for the third time closing above the 9-period exponential moving average. We've been building upside pressure of higher lows and higher highs. So if by today or Monday, you spiral into the 26.82 or higher area, that says that the weekly chart has gone to a leg C. You could get an overlapping wave here as well. This is all turning out to be very negative. It's one of the reasons why I was saying on the show yesterday that because of the weekly chart, and now we can do this real quickly, INDU, that's the Dow. Because of the weekly chart, the MACD crossing negative, the stochastic down to 64, and a decisive break of the support on the left side of 17,124, almost a one-to-one. You've almost got an A to B equals C to D if you're doing the lightning bolt pattern. But in my case, this is only leg C to the downside and an arch formation, the dreaded H, a perfect dreaded H. That says that the weekly chart almost certainly today, if we close anywhere around here, is liable to go in 1 week from a sell signal, potential sell signal, to a sell mode upgrade. That just changes things completely. Now I get to the question that Chris had asked. Hello, Basil. Happy New Year. I was wondering about this the other day, but you ran out of time on your show. Are you still expecting a coda, or could the bull market top by chance? They've been put in this action, seem highly bearish to me. Okay, I'm going to be dealing with that over the weekend. In fact, I'm just going to take this. There's no rush. I'm taking the whole week, starting this weekend, to explain what's missing. It has to do with clothes. It has to do with shoes. It has to do with automobile engine size. It has to do with skyscrapers. It has to do with just a whole series of things. And it has to do with an analysis that goes to the core of the thinking that I had in 2000, at 1998, and then 99, going into 2000, that the Dow would go to 17,000. But instead, what happened was money was diverted from the Dow 30 into the NASDAQ, and the kind of hysteria that we saw at the top. I always talk about this playing tennis, indoor tennis, court 6, and you could still see the screens flashing up in the lobby of the complex with the NASDAQ. You know, it was just wherever you went, everywhere I went, at a gym, anywhere. The TVs were always, even the barber, the TVs were turned on to CNBC. So there are a couple of missing links here. But what happened was, because I didn't realize until afterwards, when I said that I thought that the NASDAQ in March, when I got my sell signal, that the NASDAQ would never again see these levels in my lifetime. Well, of course, we've just about seen those. In fact, I can't even remember. Did we break 122? Let me just do this real quickly. The QQQ, your QQQ went to 115.75, and 120 was the all-time high. 120.5 was the high. So we haven't gone to all-time. Jim, am I going to last 6 points? No. But anyway, I meant it. You know, it's 15 years. So 16 years. All I can say is this, that top I said would be a top of major proportion, and it did come back down 82% or 85%. So in 2000, I had to wait for that December 9-period exponential moving average to be taken out. We just missed it this time. It's January now, but December was fractionally higher. It might have the same implications. I just don't know at this time. But I am looking at major tops in so many stocks and indexes in monthly charts that I have to take this very seriously. That's number one. Number two is, there is still something out there in my way of thinking that says this is not the way the major top. I'm talking about a top that is going to be a top that takes capitalism and turns it on its head, upside down. I think we have all the makings of that happening. And I'm going to just, I'm not yet ready to talk about the election per se. There was a time just, you might recall, maybe 5 months ago, 6 months ago, where I said, so far my thinking here is that it would be Trump against maybe even a Warren. And then I spoke about the irony of the way markets and history works, that President Obama, who's never discussed the stock market per se, I'm not sure if he owns stocks or anything like that. It's just never been his forte. It's never been his bailiwick. He talks about other things all the time. And yet that irony of it is that in his administration, through his duration, up until now, we've seen one of the greatest bull markets ever. Right? So with that in mind, it was during the summer. I actually remember being out at Jacob's Pillow, the dance complex. Went with neighbors. We went to see a dance performance there. It's always fabulous out there, and out in the Berkshires. And I remember sitting there. We were having our little picnic, and I said, and he's into my neighbor's just a brilliant guy. He's into everything. I mean, he just on his own, he just does everything. He was into medical records. I think it was back in the early 70s. He had a business. He's just always ahead of the game. And my thinking was, wouldn't it be ironic if during someone who has more of a social content as his forte, President Obama, you have the greatest bull market, and then suddenly you get Trump, the capitalist, and we have the greatest bear market in history. Wouldn't that be an irony? Hey, I'll be back. The Dow's down 20.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, so let me just get this chart done here. There's a red, there's a pink actually, pink and a dashed line. Pink and a dashed line sounds like you're getting a cup of coffee or something. I'll have one pink and a dashed line, please. There you are. Okay, so just missed it by a little bit. Did I do that correctly? Oh, I missed that. All right. Well, it's about right. No, let me do it correctly. I missed the top. Should have been right there, that peak there. So that's it. Sorry, everybody. I'll be back in 1 second in the real world. There it is. So that means that we're going to test the 1028.50 level. And that's going to, in the Chapman wave, this is a trough, a leg D to the downside. It's that pattern that I call the This is what we call a single leg A phenomenon, where it goes to a B, but it happens. There's always just a tiny little nick if there is a B. And it's just a news-related spiral to the upside, which is an aberration of a trend. And then how you come, this is the real trend. So let's put this into perspective. Where are we? Let me go back. To what our question about Amazon. Steve Rhodes had noticed that there was an island reversal. I've got a peak F at the top at 696.44 in Amazon. I've got a leg D, and it's almost certainly going to be a peak D today. As the MACD turns down, the stochastic's now at 84%. It says there's a real good chance that I'm going to have a sell signal if we're around this area in Amazon weekly chart. Not a sell mode yet, but a sell signal. It won't take much more to go to a sell mode. And I've got a leg D with a potential peak D if there's no new high in Amazon. These are the great stocks. This is nothing to sneeze at now. This is serious stuff. Dow's down 50. What we're looking at here, yesterday I had a question about the IYT. So let me put it into perspective. I am going to talk about it for subscribers. I'll come into the whole area of what I'm expecting the possibilities to be. Whether we make a new high or not, there are these socio-economic, political, and iconic, what can I call them? Focal points that I need to have, and they haven't. So many things have come together. Even today in the Boston Globe, what was the heading? I said I've got to show subscribers this. Someone said, in the next 3 years, they project that real estate in Boston area will be up 43%. I think this guy needs, whoever he is, needs his head examined. 43% after what we've been through? I don't even know what the average price. Let me just look it up here. I'm in Newton, Massachusetts. It's called the Garden City, a pretty suburb. There are a lot of pretty suburbs all over the show. Drive through Connecticut, they're pretty suburbs. So what is this? Average price of single family house in Newton, Mass. Anybody here? Homes for sale, Newton, Mass. Real to average home prices. Truly, okay. Oh man. All right, I'll put this in. No, that's not really the way to do it. Whoops, wrong. All right, I won't take time in doing this, but I can't believe that anybody could say that, because it's just ridiculous. When you look at these, I don't actually know how young people, yes, mostly young people, come into the city. It's just, I don't understand it. It's beyond me, because the prices have gone up exponentially, so much greater than the average wage. That's really the issue. Now, that's something I'm going to be talking about a lot. You're going to hear a lot of politicians talking about the one percenters. I contend, and anyone email me if I'm wrong, that the real one percenters are those people that are getting a guaranteed pension, especially from the government, of say 80% or 90 or 70, sometimes it's 90% of your last 3 years' best earnings. You cannot do that with safety in this environment. You find me where you can earn, well, let's make a number. Let's make it 60,000, 70,000 a year as a retired person. And how much it would take? It takes millions to get that. Safely, I'm talking about. So you get your a tax-free bond or something, but you're at risk. So to find something, it's like you're getting 2.2%. How many millions do you have to get that if you haven't got other income? Oh, thank you, Tom Ryan, right there. 742,000 Newton average price. 1 million in San Francisco. Cheapest, I don't even, you don't have to tell me, Dave White in the Den, about New York. It's unbelievable. 2 million, cheapest apartments. Average in Massachusetts is 327. All I'm saying is, fine, those prices, hey, those are the prices, and that's the price you have to deal with. I'm talking about the reality of being able to afford it. And I'm talking about what happens to, young people have to pay for us older fogies. As we get older and retirement comes along, or you reach Social Security level, whatever it is, and you're getting an age group that's going to require medical attention from the hips to the knees to the whatever, that kind of cost is going to be borne by fewer and fewer people in the age group, in the lower in the lower age groups. And I don't understand. And as magnanimous as you want to be, and to bringing in as many refugees, is that going to add to the economy? I'm just not talking about economics. This has got nothing to do with morality. Will it add? Will it enhance? Will it make greater your economic structure, or will it, at least for a period of time, weaken it? Look what's happening in Germany. So I think that this is very serious. So the real question for me in trying to answer this question, remember we were talking about the potential for a wave 5 in the Elliott wave. This is still 4 until we go by 1 penny above the all-time high of 18,351. And look, we got this is the transportation index, the peak F at 167.80. You've got the S&P. Let's go to the SPY for the moment because it's just easier to type in. Peak F, and we're making an arch formation in the monthly. Here's that trend line. I was showing it to my wife yesterday. I said, wow, this is the trend line we got to watch for. We're about to touch it. If I want to be absolutely strict, I can go to the low. And if I go to the low, then I have to go there. And we've got a way to go. But that's 176. But that's really, I think, the secondary thing. The one is you want to go to is the body where the line hits the most of each candle. And that gives you the one with the most potential as being a very important trend line. So we are right here. So we are getting close on the short term from the 182.40 low that was made in August, 182.95, I'm sorry, low that was made in August. If that H pattern takes out 182.40, not only are we hitting that trend line, a best case for the trend line, what we're looking at is a failure of the dreaded H, and the MACD's down and stochastic's down. That's the reason why I had to make a change of opinion in the intermediate term yesterday. We'll talk about that when we come back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Back, and well, let's hope you're back and that the windows, because it's winter time and most of them in the northeast at least, and the windows are closed. Nobody jumped out of the window. Here's the bullish side. Quickly. So what I'm looking at here is if there is a match, I got to get this real quick because I got to save those people from on the windowsill. Look, we could get a rebound, and all that would happen. It's a little soon. Look at that big move down. Look, look how depressing it is right now in the market. Okay, but from 18,127 on the 17th of August. To the low that was made on the 24th of August at 15,370, you got 2,000 points. We haven't had anything like that yet. It feels like it, but we've only just gone from the 37 bars of that series of tops from the high of the 29th of December at 17,750 to the 16,434, 1,100 points. It feels worse. So this is what I'm thinking, that we close somewhere in the, now if we close up, I don't know how much it's going to change the chart pattern. You really have to see it. You have to see, because the stochastic, let me show you something here. The stochastic, look, is down at 10%. We are right in the area where we should be getting a rebound. That's number one. Number two is the VIX index, as I mentioned before. I'm thinking Monday or Tuesday. I'd love for us to close at the low of the day. Horrible Sunday night. Monday comes and bam, you hit the downside. And then the volatility index gives you an upside spiral. It goes up into the 28s or even higher. I even had a measured move. I forgot about that. So this new measured move here would be from the low, and then would come in. Yeah, okay. And that means early next week it spirals into maybe the 28th, 28.33 was the 28th of September. And then you get another rally. That's the rally that's going to be really, really important. Let me explain why. Let me just have a look at this chart. Okay, we've gone down to that low there. I have to just remember these letters that you see, they call floating letters. There's nothing I can do about it. I can only call it a trough in this case when there's a lower high, and so far there is from 1924.50 to 1924.75, 25 cents. That makes a little trough. Now we can have a bit of a bounce. Okay, we've gone past all. This is the bar that takes out the left side low. That this or the very next one has to close above. In this case, 1928.50. Doing a lot. This is Technical Friday. Oh, I promised I'd do MET. We'll do that in a moment. So this is what I'm thinking. I'd love for us to close towards the lows, and then a horrible Sunday and a terrible Monday, and then we can get a rally of between 3 to 5 days. It could even turn out to be almost 2 weeks where we make another arch formation. That's going to be the big test, a really big test. And under those circumstances, it's going to give me a great deal of information about how much negativity is needed. Let me just look at the Chapman Wave Trend Index. Well, it's Richard Arm's Trend Index. I just use it in a very different way. See where that is. Oh, it's only at 155. That short-term trading index is just telling me there's so much, there's just too much optimism around. So this is gonna last a little while. I thought we'd be wrapping it up by Monday or so. We'll see. Okay, back to the story. So what we're looking at here is that within the context of all the things that I need to look at, we need to look at the TLT, because if the TLT is rallying, oh, there it is. It's at 122.92. If the TLT takes out this left side high of 123.78 made on the 21st, no, it doesn't have to do that. It just has to get to 123.40 as the market's going down. That will make any Monday or Tuesday turnaround in the market. If it's another one of these, we're getting shorter and shorter. Remember, I talked about internal lows and residual lows. This is like the August 24th. Now you're 6 months later, just under 6 months, you're getting now another test of that. But it's like potholes. As the potholes get bigger and they wear away at the tires and the suspension. So the balance on the upside gets weaker and weaker. And that's really what is happening with the potholes that we're looking at right now. That's why the weekly chart is going to be so important. And that would say that if next week the TLT breaks 124.10 on the upside instead of remaining in this fairly narrow trading band, that's going to suggest that the concept that I have of the Japanization of our bond yields is still continuing. That's number one. And it makes really a potent theory to say there's a chance that in February, because of the market weakness, that the Fed says, we've thought about it a lot. We've given great consideration to what's going on internationally, dollar. They won't talk about what's happening internally. And they'll say, because if we've decided to either keep the rates low or go lower. I'm not sure they want to reverse just yet. It might take another month before that. And that will be the kicker to see, do we get what I call the right arm extension, that rogue wave to the upside to wrap up 2016 with an all-time high as everybody starts announcing their mega whatever it is, and that wraps it up. That makes 2016 a really important year in my work. We'll see what happens. Okay. All right. So got that out the way. Let's talk nitty gritties. Nitty gritties is that if the TLT 20-year Lehman T-bond fund takes out 120 point, I'm going to make it all the way down. 119.67. It has to take that out. If it closes under 119 at any point in the next 2-3 weeks, yields will go higher. And that would say to us, at least to me, that there's now a complete change of scenario. We're in a different context entirely. Okay, so here we are. Let's go to Met, which is MetLife. MetLife trading at 42.44. It was one of my favorites to look at as a short, and then it kind of just went off my list as I discussed it in 2013, and then I discussed it again. I thought we had a trade on it at some point, or I might have chosen another one in the sector. I think I chose AET. They are different companies. This is a comprehensive global health insurance. Still holding quite well, but it's made the peak F top. That's Aetna. Let's go back to Met. And Met was a question for, now I can't even remember. I had written it down. I wrote so many things down. Met. Will I find it here? Doesn't matter. Let me just do it and I'll find out who the question was from. I thought I'd do it real quickly. Okay, I'll do it again. Met. So peak G, this is the U-shaped pattern. This is what we call the double top. I call it the drop bucket pattern. It's the bucket pattern that goes to the top. And you get this inflexive move that doesn't close above the previous high. Remember, it's like a lowercase h upside down. And it goes 57.75 as the high in July of 2014. And June of 2015 goes to 58.23, fractionally higher. Then it fails and it goes halfway into the cup, which is really a bad sign, which says you're going to test the low. You break and close below, and you can get yourself a 1-to-1, and that target's 40.32. That's number one. Number two is, if you think of here at TFNN, there are so many, Tom and so many others use the lightning bolts. A to B equals C to D. I've got legs C on the way down. That's a completely different technique. But this technique here says from there to there, you can have another move to the downside, and that would take you to right here, from there to there. And that could take you much lower. I can't tell you how low because it doesn't, but it says it's going to go to, well, it'll be the 40 area, okay? Well, I could have done it here, 1 to 1. Yeah, it's 40 to 39, and it's a 40 to 52, and I see no sign of strength even today. It's just an ugly candle. Could it have a bounce? Yeah. Would it be a great short? I would say yes. I would prefer to get it close to 45, and someone who's in it, you want to short it.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. I had so many emails, I just completely forgot. And of course, I forgot to put my earphone back in. We're back. So the Dow's now up 1, S&P's up -1. One of the things you want for a really strong bounce, I'm not talking about a 1 day or 2 day, I'm talking about like a couple of weeks, is you've got to get that volatility index screaming to the upside, and you've got to get a spiral to the downside. And I also like to have a price. I like to have a volume spike, a Chapman wave volume spike with a low. So a big rally here says we're just stalling, and it just says the trend hasn't changed and that you're going to get these flurries to the upside, and you haven't got something significant that really let your teeth onto. So there are a couple of questions, and some really good questions. I'll probably have to go into Monday to do it, and something to read about There's a debt. Oh my God, unfunded liabilities. Oh, I don't even want to go into the unfunded liabilities. Even here in Newton, this is a place where they always talk about our good bond rating and our schools, and they on this 1.1 or something in unfunded. I don't want to go there. All right, so nice bounce up in the E-mini. So let's get to a couple of things that I need to do real quickly. Wakey, my engineer says, yes, I'm awake. I'm very much awake. I've been awake for a long time today. But this is it. So that's Mike, and Mike, I'm going to read these over the weekend, and I'll deal with them on Monday. Next one is something about, Obama might have had fuel stocks before he came into office. Okay, that makes sense. Let's see. I want to get these out the way. Met. Let me do Met one more time. So Met, I don't see anything in it. It would be great to get a bounce, and then I think you can short it, but 40 is where there should be support. So I don't want to do anything now, 2 points. I'd rather have a bounce. And if you are long, I'd be really careful. Is it too late now to take something off? It's never too late to take something off if you got a profit, but if you're at a loss, absolutely put your stops in. You just have to, especially with something in this area. So MetLife. All right, now I got that out the way. You know what I'm going to do? We've got questions about Goldman Sachs and all. None of these things are looking very good. They're just not. Goldman Sachs broke the 200-period exponential. This is the H pattern, broke the left side low. It's got this week, which is too late, and next week's the latest to get right back to close above the low on the left side. Oh, maybe I think it could do that, above 167.49. Nothing to do today that I see. Okay, so let's talk about what I'm looking at. If, in fact, we have a really strong rally now, that might eliminate a Sunday night sell-off. So this is very important. I want the sell-off because I'd like to get some kind of kick for the upside. I don't mind playing the upside for 6 or 7 days, but in the meantime, I'd be looking much more to the short side. Any rally now because of the make of what we're looking at. The VIX index is very important. Closing here on the weekly basis is be careful. You are getting your triple-digit moves to the downside when the VIX is in the 22 or higher period. So this is where you have to be really careful, number one. Number two is we looked at the IYT. The IYT, briefly, we looked at it and said, it's broken its left side. Looks like the Goldman Sachs chart, right? It's broken that 128.26 low. It's at 125.92. It's got next week to close above 128.26, or else it's going even lower. And that's not a good sign. And this is, the economy essentially is kind of wrapped up in this. So as we're wrapping up and you're about to go to, what is today? Friday, so we've got another swimming lesson, because remember, 5 days a week now, we've got swim lessons. And go to the front page, there are a whole bunch of webinars and things that will be offered, just a wealth of information. So I'm going to say, so I don't get cut off, I'm going to say have a wonderful weekend. Hope I didn't depress anyone, but we've got to look at both sides of the coin. And all I'm saying is that the chart says on a weekly basis, we're underneath key support levels. If that's the way we close, I have no choice but to say trend change, and then I have to look at what on earth could give us a kick to go to all-time highs later. And that's the way I'm looking at it. I'm going one step at a time, and that's the step. Have a great
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.